Hello everybody, welcome to another update on the stock screener. There have been people poking me about graphite, several people. So I'm going to take a look at a graphite miner just to see why there's so much interest in graphite. So I took Nextsource materials, that's the only one that I know of. And share price is actually pretty stable, has actually gone down a bit since the run up. And this is an emerging producer. So the latest news is that the processing plant is arriving at the port. So it's going to be assembled in a month. So this is the port with the processing plant apparently. And they will be going into production very soon, probably in the coming month. So that's for phase 1. So yeah, it's going to be in a de-risking phase. Very good. But let's take a look at the valuations. Okay, so this is a company with market cap of 226 million, mine life of 30 years. Very good. I like high mine lives. Capex at 80 million. That's doable. I think a lot of it is already financed because they have already started construction and are already commissioning it by next month. That's for phase 1. Now they also have phase 2, which will come online 2 years after phase 1, and that will have this kind of production. NPV of this production is at 180 million, NPV 8% after tax at this graphite price. And you can already see this is a low cost producer because OPEX is only $500. Maybe it's 600 now because of inflation, but still there is a huge margin. So that's good. NPV is a bit low, so around 200 million for the phase 2. So you need to wait 2 years even. Market cap is already above this price. So that's why I think this is fair value. So that's the C1 cost. I added some of this for the AISC. EBITDA multiple using these numbers gives me 135 million. So it's a bit overvalued based on my calculations. But this is very good. They have a new feasibility study that's going on where they will triple the production from this number to here. So with this production, they will be able to have an EBITDA valuation of 450 million. So that's much better, and that's undervalued then. So there is a double possible at current prices in 2 years. So if you wait long enough, then it will go up. The resources, we have around 160 million tons of this graphite and then 6% of that. So a lot of resources, probably 100-year mine life. So this is 30 years. And when they use this, then it's, this is using proven and probable, of course. But they can easily triple this because they still have a lot of measured and indicated resources. So that's why they can triple the production. So a lot of mine life, very good. And it's at surface. So here you can see what they will be doing. Feasibility studies start with phase 1 at 17,000. over the first 2 years, and then they will go to 150,000 because they have this new technical study, and that will come online in 2 years. Okay, good. This is the NPV calculation. Current prices are at 1,250, so around this level here. So 180 NPV, 8% discount. That's overvalued, but they can triple it to 150,000 production, so then it becomes undervalued. So if you think that graphite goes up in price, then this is a buy. So let's say it goes to 1,570, then we have 300 NPV at this production level, and you can do this times 3 because they will go to 150,000 production. Then it would be a $1 billion valuation NPV. So I think there is upside around the double or triple if graphite goes up. So it's all about the graphite price. Do you think that this is going to go up or down? That's the big question. Here you have the numbers again. The 180 million payback is now at 4 years. So that's not that good. But if the graphite price goes up, then this can go down, of course. This is the distribution of those graphite flakes that they produce, and most of it is 4865. So that's the distribution. Then they have some large flakes as well, 8.2%. So this is the calculation of that. Apparently 50 mesh is most expensive. Then they have the 80 mesh is less expensive. And then they have some other things that are less expensive. And then you add it all up and you have around $1,200 for the super flake. This is about the price of 80 mesh. So we can just use the 80 mesh price, which is this one, 80 mesh. And this is around 1,200, 1,300 CIF, but you need to take FOB because this NPV is calculated with FOB costs. So when we look at the latest data, June, the FOB price of 80 mesh is around 1,250. Okay, so we can use currently the 1,250 price of graphite. That's also what I used here. Okay, it is 1,208, but okay, then you can take 200 million NPV right now. So it is currently trading at NPV. Yeah, fair value. Now let's take a look at the fundamentals of graphite. And here you can see that graphite is going in a deficit starting next year. So we had oversupply and now we are going into deficit. Of course, these graphs, we have these graphs everywhere. We have lithium graphs going into deficit, copper graphs into deficit, rhodium into deficit. Everyone is saying we are going in deficit, lithium deficits, but the price doesn't go up. So take this graph with a grain of salt, but okay. You can see that there is a shortage coming here as well. In 2023, it starts to fall, so that's a deficit, a shortfall, because of the huge demand that is coming online due to the EV revolution, and supply is not reacting that much to this rise. So I think, yeah, this is a good play to be in the graphite space, if you believe this chart. So our project is located in Madagascar, and it goes to the EU, Japan, India, China. They already have some off-takers. Europe, this is a big risk right now because Europe is in problems. 15,000 tons, so that's a big chunk. So that's a huge risk. But if you like this company, you can buy it. This is the resource, very large resource. Just look at this. When you compare this with lithium, it went from 50,000 to 500,000. That's a tenfold because of a deficit, a tenfold. We haven't seen this spike yet in graphite. So graphite is now only at 1,000 to 1,200. What if graphite is going to spike to 5,000 or 3,000 even? If it does a lithium run, then we can actually go to 3,000, 4,000. I don't know. If it goes to 3,000, 4,000 in a few years, then we have a 1 billion NPV at 45,000. And if they go to this production, you can do this times 3, and we have 3 billion in NPV. I would estimate that to be a value of 1.5 billion. So this can easily go 6-fold, 7-fold if the graphite price goes up like this. Okay. So this is the speculation. If you think this goes up like this is a good buy because of this this curve here. Okay. Also, this Molo project is one of the highest margin projects. So the operating margin is one of the highest. So most profitable mines are in Brazil. So these are from Brazil. The smaller one is in Madagascar and is even higher margin. So all the bad mines are here. China mines, very unprofitable. And we are here at a high margin. So this is a project that will not go bankrupt. Okay, if they can keep on producing, this will not go bankrupt because it's a very high margin. So that's the safety on margin for this project. Of course, you need to take in account the supply chain as well. If they have problems with supply chain, then it's over. We know that from other projects, but yeah, the margins are great. Graphite is typically produced in China, and here is Madagascar. It's a low supply, and then we have Brazil. And of course, all of this graphite goes to China because they are the leader in EVs. Graphite demand is going to grow the fastest, apparently, even higher than lithium. So when are we going to see this graphite run? We already had a lithium run. Now we could see the graphite run if you believe these numbers of demand growth. Okay. So for Nextsource materials, I think this is a great speculation. They are already in production in 1 month from now. So that's de-risked. They will have some cash flow coming in, and then in 2 years they can triple production. So there's plenty of upside here, especially when graphite keeps on rising. So take this into account. I think this is fair value and a good speculation on graphite. And I'll see you in the next video. Bye.